Today, Bitcoin swings as investors shed their speculative tech and crypto holdings. Senators call for a probe into the Trump family's World Liberty Financial over alleged token sales tied to North Korea and Russia. And John Wu of Ava Labs breaks down what factors contributed to Bitcoin's price dropping below $90,000 this morning. Welcome to CNBC's Crypto World. I'm Talia Kaplan. Cryptocurrencies are mixed as investors continue to sell their speculative crypto and tech stock holdings. As of noon Eastern, Bitcoin dipped less than 1% from the 24 hours before, but that's after touching the $89,000 level earlier this morning, its lowest since April 22nd. Meanwhile, Ether rose more than 0.5% to $3,149, and XRP was trading at $2.22. The moves come as investors have shed their AI-related tech holdings this month in the stock market. Bitcoin appeared to foreshadow the risk-off move, peaking in early October at a new record above $126,000 and falling ever since. All right, let's talk about the top stories. 2 U.S. senators are pushing the DOJ and Treasury Department to investigate the Trump family's crypto platform World Liberty Financial over alleged token sales tied to North Korea and Russia. In this letter, exclusively obtained by CNBC, Democrat Senators Elizabeth Warren and Jack Reed argue that the platform lacks sufficient safeguards to prevent bad actors from moving funds. The letter, which is addressed to Attorney General Pam Bondi and Treasury Secretary Scott Bessent, asked to outline actions the 2 departments are taking to investigate potential national security risks posed by the crypto platform. The letter points to a September report from a government watchdog group called Accountable.us, which alleged World Liberty sold its platform's WLFI tokens to various highly suspicious entities, including traders with ties on the blockchain to a notorious North Korean hacking group, sanctioned Russian money laundering entity, and an Iranian crypto exchange. Separately, an issue was also raised over bad actors with connections to U.S. adversaries potentially influencing the company's governance through the purchase of WLFI tokens. CNBC reached out to World Liberty Financial, and a spokesperson denied any wrongdoing, saying there is no conflict of interest between World Liberty Financial, a private crypto company with zero political power, and the U.S. government. The spokesperson added that World Liberty Financial conducted rigorous AML and KYC checks on every pre-sale purchaser of the WLFI governance token, the highest standard in the industry, and turned down millions of dollars from potential purchasers who failed the tests. Next, billionaire investor Stanley Druckenmiller disclosed a new position in stablecoin issuer Figure Technology. According to a new regulatory filing, his investment firm invested $77 million in the company. Figure Technology began trading on the NASDAQ back in September. The company is a founding member of the USDF Consortium, a group formed to support a bank-minted stablecoin. As of noon, Figure Technology shares fell more than 8% after jumping yesterday following the news. Druckenmiller earned praise in recent years for being ahead of the curve on NVIDIA, having first bought its stock in 2022. All right, back to markets for our main story. I spoke with John Wu, the president of Ava Labs, this afternoon to weigh in on what's behind crypto's downturn and what we can expect as we head into the new year. This morning, we saw Bitcoin's price drop below $90,000, its lowest level since April. But of course, throughout this year, Bitcoin hit several records, including just last month when Bitcoin crossed $126,000. Since then, the cryptocurrency slumped into bear market territory. So what do you think is behind this downturn? Some industry experts tell CNBC this could be an initial macro-driven sell-off followed by forced liquidations. Do you agree with that?
Well, yeah, there's definitely a macro element to this, no doubt. I mean, people think the Fed's going to ease less than, anticipated. Also, you see all the high beta AI stocks also selling off, but obviously crypto reacted first. I think it's ironic because there's so much fundamental momentum and use right now of the asset and of the blockchain, from stable coins to Figure. Look at all the public companies that have IPO. Their revenues are up 50 to 80% year over year in the space. But what people have not anticipated, and myself included, is that there's just been so much new supply. When Ava Labs was started, 6+ years ago, there's probably like a couple of thousand tokens on Coinbase and Binance. and then it went to like 10,000. And then today there's probably like millions, including all the stuff on chain that's not even listed. So you have like literally like meme coins, all that supply is weighing on the market. And on top of that, you have new ways to access. 200 DATs now are out there. You can also access the asset class and all these new IPOs, like I mentioned, Circle, Figure, other ways to access the asset class. So all of a sudden, these treasury companies, these other IPOs, plus all the new supply, I think that's what's dragging the space. I think the demand needs to catch up a bit. And yes, the macro hasn't helped. And sure, there was a deleveraging event, early October. All of that is basically symptomatic of too much supply.
And I want to ask you more about DATs in just a bit, but what are the implications of the drop in Bitcoin's price on the industry at large?
Yeah, I mean, obviously it's never good, but the weird thing is, at Ava Labs, we work a lot with enterprises, with traditional Wall Street. The operating momentum of the blockchain as a use case has not been stopped at all. I think what you're hurting is a lot of the on-chain activity, unfortunately, for some of the retail players. And also, my reading in various trade publications seems like 90,000 is a big number for Bitcoin because a lot of volume in the ETFs were created roughly around that 90,000. So my hope is that people who got excited about this space, especially individuals, especially around that 90,000 Bitcoin price, do not go into the red.
So longer term, crypto investors argue that the foundations of the digital asset story remain in place. What do you think is in store for Bitcoin for the rest of the year and as we head into 2026?
So I made a couple predictions, and I have to admit one of them did not pan out. I literally thought Bitcoin was easily going to go to 200,000 and eventually 300,000. Obviously, it's getting close to the end of the year and doesn't look like 200,000 is going to happen. But I still believe it's going to 300,000 over time. The adoption in terms of using it as a store of value is becoming more and more prevalent. Obviously, it also trades as a risk asset because I think 50% of the people who get into this space still treat it as a speculative asset. The other 50% actually own it for a digital store of value. So I think over time, you're going to see more and more of the holders in Bitcoin, at least, become more of the store of value digital gold type holder as opposed to the speculative holder. And that's going to play itself out. And then ultimately, you'll see it back to much higher prices.
As you mentioned, now there are more instruments through which people can access the crypto market. Just last week, the first spot XRP ETF started trading in the US in its first day. The product experienced strong trading volume of nearly $60 million. That's the highest for any ETF launched this year. So what does this show you? Does it reflect growing institutional interest in cryptocurrencies beyond just Bitcoin and Ethereum?
Yeah, absolutely. Obviously, people who access ETF can be retail as well. It just shows that people can access this in many different ways. And with that one, and there's actually 3 or 4 more coming. There's going to be one on Avalanche as well. All of these are different ways for individuals and institutions to access the space, which is good ultimately. Access is important. But also, like I said before, because of all these new ways of accessing the space, the unfortunate thing is they don't actually go on chain like they used to and actually try out things in the DeFi LP pools and stuff like that. It's a better construct, meaning a UX UI in some ways, but also worse in other ways because it's less of a utility and they don't go into the chain and actually play around with it and see the value of being a lender or borrower in the DeFi pool.
Now, we also saw spot ETFs linked to other altcoins like Litecoin recently launched here in the US. On top of that, we're seeing a growing number of publicly traded digital asset treasury companies. What do these increasing number of instruments through which investors can access crypto signal to you? And is one vehicle more favorable than the other, in your opinion?
I think they're different. An ETF will be palatable to certain types of investors, but that, if run well, is actually a yield enhancing vehicle, so you can actually get more out of it per share. And if done well, again, it's a very good instrument for the right type of person. Now, this is something I think last time I talked to you, 5 or 6 months ago, I thought there would be at least 200 companies by 2026 that have a treasury related on their balance sheet for cryptocurrencies. Strangely enough, there's about 200 around the world already in 2025, so they happen far faster. So at the same time, this is also dampening some of the activity on chain as well as the tokens. And the reason is because some of the players, the funds, who are involved in these DATs are now allocating to these DATs and these DATs commitments. And not all these DATs have actually gone live. They've either done a pipe or waiting for the SEC, especially with the closing of the SEC, they're waiting for the SPAC or the SEC to approve of a reverse merger. So you see some money, call it, on the sidelines waiting for it to be approved officially before they can actually have excess capital to deploy into the space. So that actually, in a weird way, for the short term, is affecting the space in a negative way.
Turning to regulation, we have seen some major regulatory advancements for crypto here in the US this year, with things like the Genius Act becoming law. I know that in the spring you had predicted that by the end of the year there would be both stablecoin and market structure legislation in the US. Of course, the government shutdown put a hold on some of that regulatory progress, but just last week, the Senate Agriculture Committee released a long-awaited draft of a crypto market structure bill. What would you like to see from lawmakers on Capitol Hill as it relates to crypto market structure? And what's a realistic timeline, especially now that the government reopened?
Clarity. I think, obviously the Agriculture Committee is more biased toward the CFTC, and part of that bill that they wrote gives CFTC a lot of clout and weight. But also, they came out with rules that need to separate functionality, governance. It has to be separated properly from one person in an organization from the other, just like banks have walls between their investment banking and their research. So I think all of that is fair. And having the right taxonomy of tokens is very important. I had a chance to talk to the SEC Chair Atkins recently at a conference, and he's very gung-ho, not just in crypto, but in general, clarity of rules, because he's interested in the retail being able to access more securities. And he thinks part of holding up IPOs is the fact that there are so many loopholes and administrative things, bureaucracy, in other words, rules, especially with the cryptocurrency, which is not clear. I hope the clarity comes, taxonomy for different types of tokens. And I hope that they can also figure out division of responsibility within a company for various parts of the crypto stack, if you will.
Okay, that's all for Crypto World today. We'll be back again tomorrow, and we'll see you then.